This podcast is brought to you by the Wharton School at the University of Pennsylvania. Well, for the second time in a couple of months, a C-suite executive of a major U.S. company was arrested for activity outside of the office. This time, Tyson Foods CFO John R. Tyson was arrested for public intoxication and criminal trespassing. And it brings questions into play about if the 32-year-old finance chief and member of the founding family can continue on in this role. By the way, Tyson Food earnings are set to come forward in the next few days. Nina Trentman, bureau chief for the Wall Street Journal CFO Journal, joins us with more on this. Nina, great to talk to you again.
Thanks for having me.
Yeah, so there were already, I guess, some questions about this member of the Tyson family being in this position, the question of nepotism, et cetera. Those were already kind of out there to begin with.
Yeah, those questions came up when Mr. Tyson was appointed to the role in late September. So of course, he's not the first family member to take on a leading position in this company. His father was chief executive and has been chairman. His aunt is on the board. So this is a company that is heavily dominated by the Tyson family because they have about 70% of total voting rights. There's two share classes, which means that the Tyson family, through its holdings of share classes B, can basically outvote any regular shareholder 10-1. So it's not necessarily a very usual company because of that, even though it's a publicly traded company. But his young age, so 32, you pointed it out, is very young for a US CFO. They're usually in their mid-50s based on data from recruiters that we have. So that was already a red flag for recruiters. And then also now, of course, this most recent incident a few weeks after he started raises now more questions about his fitness for the role.
We mentioned his age, but had his resume and prior work experience kind of opened the door for him to potentially be a candidate for CFO without maybe as much conversation as maybe there should have been?
Well, he previously worked in investment banking with JP Morgan. He's held roles at the company before. So he was, for example, the chief sustainability officer before. But given the size of Tyson as a company, it's a 24 billion company. So that's quite significant. His age is one thing, but also probably if there wasn't a family connection, then he would have been asked to be a CFO of a smaller publicly traded company before he would have gotten such a significant role there. So we've heard governance experts say over the weekend and earlier this week, well, is this maybe a time for him to take a pause from the role?
Right.
So we'll see if what Tyson says, and it has so far only acknowledged the incident. Mr. Tyson himself has said he would get treatment for alcohol use, but we don't necessarily know if he's going to show up at the company's earnings presentation next week, November 14th.
Well, and obviously, I mentioned it, I kind of alluded to it at the top. We had the incident a couple of months ago with Beyond Meat's COO Doug Ramsey, who was arrested for biting a man's nose when he was attending a college football game. And it seems like that, I don't know if it's a lack of understanding, but obviously these are instances where they are in very high public positions with public companies, and they have done things outside of the office that can obviously impact the company on the back end.
The other incident that you mentioned, I think it also took place in Arkansas. So it's interesting to see that there's two incidents in close proximity of each other. I'm not sure if two executives already make a trend, and there is reports of executives misbehaving in public every now and then, but it certainly raises questions given that these are publicly traded businesses that have obligations to shareholders, that have public brands, that are spending a lot of money on building their brands, on marketing. And these kind of incidents, of course, grab the headlines and grab people's attention and are detrimental to brands' values and what companies are trying to achieve with their messaging and with what they're doing.
We know that stockholders seemingly are having more and more impact in terms of what their expectations are with the company. Is there the potential here, even with the family controlling a lot of the stock, that stockholders could press the company for the removal of Mr. Tyson?
They could certainly ask for it and press for it.
But based on this, the voting structure that I just mentioned, which basically puts a majority of voting rights into the hands of the family, they could place a motion to remove him or withdraw him. But just by looking at the maths, it's unlikely that this motion would even move forward. We did see in terms of the share price that it declined a little bit from yesterday. It has lost about $2 since opening this morning, or opened $2 lower. But it remains to be seen if this is an ongoing issue, which also depends on how the company now manages it. If the company approaches it directly, following the advice, for example, from governance experts to acknowledge this incident and come up with some sort of response, that would be one thing. But we could also see them not really doing very much, and that, of course, then doesn't make this issue go away.
And with the fact that earnings are coming up fairly soon, I guess the expectation is that we will hear at something about this. To what level, I'm not sure, coming up in the next earnings call.
Yeah, I'm very curious to see if Mr. Tyson himself, if he will take part in the earnings call, given that this is the first company's earnings since he became CFO, and this would have been basically his debut as a public company CFO. Curious to see if they'll have him speak, if he's going to be taking part in the earnings call or if he won't. We tried to call the company on this, but haven't received a statement on this. So that would be one thing to watch, because if he appears during the earnings call, then he will certainly have to address this issue in some way or the other, because analysts will ask about it. It's unlikely that they wouldn't ask.
And go back, if you can, what the composition of the board of directors is basically what?
So the board of directors is led by Mr. Tyson's father, John H. Tyson, who's been chairman since the late 90s. Then we also have his aunt, Barbara Tyson, who's been on the board since the late 80s. And then we have other people who are independent directors. And the company previously has pointed out that basically the 13-member board is largely filled with independent directors.
And so that could play a role as to whether or not Mr. Tyson, John R. Tyson, would potentially stay on with the company, or as you said, he's been willing to go to treatment and stuff, and whether that is the path, have him go to treatment, get counseling, and then potentially come back into the role.
Yeah, that's one thing that governance experts recommended, to potentially just take a break right now, get treatment, and then come back at a later point in time when hopefully the incident has been largely forgotten, a news cycle has moved on, and there being then a chance for him to start anew as CFO, which depends, of course, on what he wants to do, on what the company wants to do. But I'm sure that behind the scenes, these are all the questions that are currently being discussed, and also that are the questions that are going on between the family, the board, and other managers in the company.
But this is obviously a learning experience for him, unfortunately, going through this, but it's also kind of a warning to companies just to be aware of this as a potential impact on their firm. They obviously, most of them probably are already, and just to kind of reaffirm the importance of the role of executives, not only in the company, but outside of the company as well.
Yeah, this, of course, did happen outside of work hours, apparently last weekend. So but yeah, it's true. Like, public company executives are basically always on the job, because in some way or form, whatever they do, they have to be careful that doesn't reflect badly on their company, and that doesn't make them appear in an unfavorable light, and might have drawbacks for their roles. So, which is why most often we see public company executives being very careful about what they do, what they say, and just being aware that there's always somebody who will pay attention to what they're doing, not because of them themselves, but just because of the role that they're having.
Nina, great to have you with us today. Thanks very much.
Thank you.
Nina Trentman, who's bureau chief for the Wall Street Journal's CFO Journal. To keep engaged with Wharton Business Daily and other Wharton School shows, visit businessradio.wharton.upenn.edu.